This is your host Vaibhav for today's session of automated trading. In today's session, we will be continuing with our development of the algorithm using AC2 along with the SMA and MinMax. And this is, if we go back in time, this is the fifth webinar in this series working with the AC2, and also after adding the MinMax, this is the second part. So to get a full grasp, you should be familiar with the earlier parts also. So if at any point in time, if you feel that you need to see the earlier parts, they are also available in our Endoscopy webinar channel. Now let's get started for today's session. We will be continuing with the acceleration deceleration oscillator and how it can be utilized for our entry and exit purposes. So I hope you are familiar with its working. Along with that, the SMA is going to be there. SMA will help us define the trend. So we will be utilizing the simple moving average to see whether the trend is bullish or bearish, and also we are going to create a price band so that the trades will be executed only when the price is within the territory which we are going to define, that is 10 pips on the either side of the SMA. And MinMax will also be utilized to see that there is enough of volatility, enough of momentum in the price, so that we trade only when the market is in a mood to make some moves rather than staying idle. And before we get started, this is the standard disclaimer that this is only a tutorial session to help you build algorithm which you can utilize to trade in the financial markets. This in no way is not I'm not any kind of presenting advice or any particular setup as a fully profitable venture, and these algorithms which we will be developing here, you can use them only if you are satisfied with the results, and then you will also need to run the extensive trial runs, and sufficient amount of time should also be given for the mock trials on the demo account. So let's get started. First of all, we will take a look on the development so far. So here, this is the minimized version. We will go into the block by block frame as well, but first, this is the algorithm which we have developed so far, and I will now give you a brief recap of the development done so far. Here we did the instrument subscription, where we have subscribed the Euro USD as our instrument, as our default instrument, and the position amount has been defined as 0, so that trade will be opened only when there is no other position already open in our account. Then these are blocks for acceleration, deceleration, oscillator. I think I will need to zoom in further. So here it is, and these blocks have been utilized. Here you can see that shift 0 means this is the value of the current period, current hour, and this is 1 hour back, and this is 2 hours back. And here we are utilizing these values to see that the trades are going to be opened only when the momentum shifts from bullish to bearish, or from bearish to bullish. So because of that, this we have utilized this combination here, and then we have done some calculations, and here we have defined the buy entry and sell entry for our pending order, and this is the order validity time, which is 1 hour. We have added SMA, this is the current SMA, and then this is 5 hours back, shift 5, to determine the momentum. And these are min-max. We will be utilizing the values to determine there is enough volatility. So we are going to determine a range of around 30 pips to a kind of deviation that should be there, and that will give us an idea that volatility is there so that we can execute the trades. And this is the calculation in which we are going to define the price band. So SB is of 10 pips and this is the SMA 50, and we are going to create the price band using these calculations. These further calculations are here, and here this is maxima minimum SMA, and it is the difference, and here we have defined the minimum difference to be of 30 pips. So let me show you the ER value. ER value is entry range, and entry range is of minimum 30 pips. So here you can notice it is 30 pips, and we will be comparing these values, both these output values, to this DR before we can make an entry. And here let me explain you the conditions we have put in so far. So this is the positive 14, negative 10 and negative 19. Let me see which is the current period. So negative 19 and 19 is current, 14 is 2 periods back, and 10 is 1 period back. So now I will explain to you. Here 19, that means that bearish momentum should be there and current value should be lower than the 1 period back value, and the 1 period back value should be less than 0, and similarly the 2 periods back value should be greater than 0. That means that the trend earlier was bullish, then in the hour after that it turned bearish, and this is the continuation of the trend in these hours. So now we are in position to execute the trade, and this line 44 and line 45. So here that SMA is falling, the current SMA value is lower than the prior SMA value. There is 5 periods back, and that is going to help us determine the trend. And the last tick price should be less than the upper band, that is SMA plus 10 pips, and the last tick ask price should be greater than the lower band. That means the price should be within the defined price band of 10 pips. Now this is the development so far. To that we will now add some further conditions. So I will explain to you on charts here. So what we have done, we have determined that the deviation between this SMA line and this maxima, or when we will be executing the sell trade between minima, should be at the minimum, should be 30 pips. So here you can notice that the current value of the SMA is 1.081 and the maxima value is 1.086. So that's the difference of around 50 pips. So it is more than our requirement of 30 pips. So if other conditions are fulfilled, the trade will be executed here. And as I said, let me bring in a pointer so the signal up. Simply by using the AC2, the trade is supposed to execute in these hours. That is, here the trend was bearish, then the trend turned bullish, and in this hour it is continuing to rise. So the buy trade is supposed to happen in this 16 GMT of 24th of February. From you looking at these SMA and AC2 values, and then the additional conditions comes in that the last tick price. Now what time it is? 16 GMT. So we have to see the 16 GMT price, and the 16 GMT price has been in the range of at the lowest price it was 1.084, and the SMA is of around 1.0816. So this is not going to work because the 30 pips, this difference, the current price is 30 pips and our requirement remains of 10 pips. so the trade would not have been executed if we were running this algo. So here the AC2 condition is fulfilled, the deviation of 30 pips is also fulfilled, but then the price band is the value, the price band is not fulfilled, and because of that the trade will not be executed. But maybe this time around we will have to see if similar conditions can be fulfilled. 17 GMT, and here also I'm afraid the conditions are not going to be fulfilled. So this is the structure where we will try to see that our multiple conditions should be fulfilled, only then the trade will be getting executed, and that is the basic point of utilizing the SMA MinMax along with the AC2. So let's continue with our development here, and now what we will need to add is that we will need to bring in the if blocks and define the conditions. We have done these indicator blocks so far, and now we need to add the conditionals. So we bring in the if blocks, and let me see what we have done so far. We have determined that AC2 should be shifting the trend, and along with that this SMA line has been defined and the price band has been created. Now we need to add this difference, that is, if we are going to go for a sell trade, then that means the sell trade should happen only when the minimum value is more than 30 pips away from the current SMA. So here the SMA is of 1.079 and the minima is of around 1.077. So the 30 pips requirement is not going to be fulfilled. So in similar scenario the trade is not going to happen. So only when the other requirement that there should be the 30 pips deviation between the SMA and the minima, only when that condition is fulfilled the trades will be executed by our algorithm. So let's go for it. Here I think if we see the current value is of 1.1016 and this is 1.1039. Here also the 30 pips condition is not going to be fulfilled. So we will be seeing that only on few occasions when the conditions will be ripe, our algorithm will be executing the trades. Otherwise, it won't be executing the trades. So let's get started. And here also 1.0806 and the value is of 1.07822. I feel 30 pips condition is looking a bit tough for the price action which we have seen so far in the Euro USD. So what we do, we bring it lower, maybe 25 pips should be good enough. So we define it at 25 pips. So let's reduce it. We can change the parameters anytime we wish after observing the pattern, the historical patterns. So let's see where we have defined. We have defined ER here, and we will bring it lower to 25 pips. Let's save it, and now we bring in the A block, and in A block we will put in line 44 minus minima, and this difference should be of 30 pips. So we bring in not 30 pips, 25 pips. So we bring in DR here, and the SR should be greater than DR. So we here bring in now we will snap this connection and we will bring it here, and line 44, that is current SMA, should be less than the prior SMA, and here we will connect this value, that is SR should be greater than DR. That means the difference between SMA and minima should be greater than 25 pips, and we will put the similar condition for the buy trade as well. So here the BR maxima minus SMA should be greater than SR, sorry, DR. So we have put in the condition here also. And as you can notice, you will need to snap this connection, and line 44 should be greater than the prior SMA, and this should be greater, the difference should be greater than 25 pips. So this is the requirement which will need to be fulfilled by the price action, so that the algorithm then can execute the trade. And now I think we are almost done here, and let me take a look if we are missing any conditions. I think so far so good, we have done pretty well. And here let me just give you a brief summary of the requirements for any trade, that SMA should be falling for the sell trade and SMA should be rising for the buy trade. So here if the SMA is falling, the algorithm will be looking only for sell trade. Now the second requirement is that the minimum value, while executing the sell trade, the minimum value should be 30 pips, sorry, 25 pips or more than that. It should be more, the difference between SMA and the minimum value should be more than 25 pips. So suppose here if you were to check, then the value is of 1.094, and here the value is of 1.097. So our requirement would have been fulfilled, and algorithm, if the other conditions were satisfied, would have gone for a trade. Now on top of this requirement, we also need that the last tick ask, or maybe tick bid, that is the last tick price, should be within the 10 pips of the SMA. So I think the price action will need to be would need to be pretty close to the SMA level, and only when we see the momentum shifting, then only the trades will be executed. And as you know, the SMA uh, condition once fulfilled, the algorithm will check for AC2 conditions as well, and the acceleration deceleration. Here it should be shifting momentum from one side to another. So for any bearish trade, the momentum should be shifting from being in the bullish territory to being in the bearish territory. So here you can notice that on multiple occasions momentum shift from bearish to bullish and from bullish to bearish. So in a day, the momentum keeps shifting all the time. So I think we are good to go. Can do the test run of our algorithm developed so far. So let's save the file. It is Feb 21st, as that is the date when we started working on this algorithm, and now we are in the final phase. Let's save it. Yes. And now we will need to bring it here, and for that we will need to set the zoom at 100%, and let's export it. Let me see if we have this file. The earlier file shouldn't be there, otherwise we will need to do the cleaning up first. Algorithm, Java, and here in this folder February. So let me delete this earlier version, for which we had done the test runs on 24. Now we will export the new version here. File, export in Java format. You have to export it in the Java so that you can run it on JForex platform. Okay. And we have to save it first, and we will keep it in the same folder of algorithms, where I have algorithms developed during different months. So here let's save it as Feb 21st. It is saved. Now we take that file again, and we will need to compile it. This PC, take Octave and Java algorithms, and here it is Feb 21st. So we take this file and we open it, and we will need to compile it. Let me see the code. The code is of almost 900 lines, and I hope we have written all things properly. Let's take a brief recap of the conditions we have written here, we have added here, and it looks good to me. And of course, if you spot any mistake or any omission, silly error, you can always point it in the comment section, and that will also make our webinar more interactive. So I think we are good as far as I can see, and we will compile this file. The compilation is done, successful. That means our format is right, and we can do the testing. And I think we will need to see on what time frame to do testing. Here we will simply try to do the testing for a day or two, and for longer time frame you will need to do the testing on your own, as we are not able to get the whole test run done here and now. It also takes a lot of time, and also we are pretty short on time, so I will see if there are any earlier instances of price action where our required conditions would have been fulfilled and the trade would have been executed. So maybe we should give a try closer to this 13th and 14th of January. So we will do the test run for 13th and 14th, and we will see if any trade will be executed in that time frame. We have been able to compile it. Now account size, we let it remain as it is. The instrument is Euro USD, and we simply put in the custom dates here, and the custom dates will be 13th of January to 14th of January. And for 2 days we will do the test run. When we were on the second or maybe third day of the development. We had done the test runs on that day also. We reduced it, the slippage is reduced, the stop loss and target remains as it is, and we do the run now. I hope our test run will be completed swiftly so that not much time is wasted. We bring in the equity, and we already have added 9 of the equity. So here it is, our algorithm is at work, and this is how it would have traded on the 13th of January if it was running on live mode. I think our algorithm which we have developed so far won't be executing too many trades. It will only trade when the situation looks optimum, and the basic purpose of the webinar so far has been to give you an idea how you can execute, how you can build and execute this trading setup where the trades will happen only when our conditions are fulfilled, and it's pretty efficient also as it will be working day in day out, and not much room for an error. So as I told you, all three conditions are not being fulfilled at the same time, and because of that no trade has been executed during our defined time period. So we leave it at that, and I would advise you to do the extensive test run for maybe around at least 1 year to get to see how our idea would have worked in the recent past, and also what kind of trades it will be doing if you were to run it on the live account. So that's it from my side for today's webinar session, and I think tomorrow we will be taking up some new indicator. We will try to do some new development. So from tomorrow we will be starting from scratch, and before I sign off, I would also like to summarize of the development in these last few sessions. So again, here the idea I think would be explained better on the chart. So here it is. We are seeing that when the SMA is rising, in such a scenario the algorithm will look for buy trades. When the SMA is falling, the algorithm will look for sell trades, and on top of that the further requirement is that there should be enough of volatility, so the closest maximum value and the minimum value should be more than 25 pips away from the SMA. So if it's a buy trade, the gap between maxima and the SMA should be more than 25 pips. It's a sell trade, then also the difference between SMA and the minimum value should be more than 25 pips, and then the price action should be consolidating closer to the SMA, and it should be within the price band of 10 pips. So that is also one of our condition, and only when all these conditions are met, the algorithm will execute the trade. And of course, I don't think I need to remind again that the trade will be getting executed only during the initial hours of a trend change and not after that. So that's it from my side for today's session of automated trading. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. See you tomorrow. Trade well, trade safe. Have a good time. Bye bye.